A very good morning to you, Rufus. We're seeing the market falling back for the third consecutive day. Is this a profit taking at play, or is the market really losing steam?
Well, I think the market is just in the process of taking profits off the table. Well, these are just short-term profits. When you look at the market has been moving up since breaking off the resistance last month of 3,700. So I guess the 200 points that we have added since that time, I guess these are just short-term profits. I think therein the market still has the momentum to move up. If it breaks above the resistance of 3,800. So I guess there's still more buying pressure inside the trend. Yeah.
Now, let's look at some of the stocks that have provided support to the market. Mumias Sugar is expected out with results. We have seen that stock rally on the back of the results expectations, with some investors saying that we could see a dividend out of the counter. What are your thoughts on Mumias and the type of results we could see coming through?
Well, I have a different view. Well, of course, there could be a play of a dividend play guys are expecting in the market, but I look at it from a long-term point of view. There has been news that the government could be implementing a proposal that was put forward last year that they could start making making sure most of the guys that do fuel products and servicing, making sure that every fuel products are laced with the ethanol. And you know that Mumias has been developing an ethanol plant for the last 1 year. Actually, it's supposed to go into production by the end of this year. So I guess this is just a well-timed move. These guys are bound to reap hugely from that plant, producing ethanol. So I guess some of the guys who are getting into that stock are actually riding on that particular news. And besides the fact that yes, we expect good news out of the diversification strategy that they've been pursuing for the last 2.5 years. Well, these guys have been going into water processing plants. They've been going into energy production and whatnot. And I guess this augurs well in terms of their bottom line. Yeah.
Looking at East African Portland Cement as well as the Unga Group, they haven't been playing in the market for quite some time now, but they are, however, providing support. Your thoughts on the two counters, that's East African Portland Cement as well as Unga Group?
Well, okay, but one thing you realize about those two counters is that their liquidity just turns out like a sore thumb, and I guess their performance, you cannot really look at it from a supply and demand perspective, because you don't see a lot of volume, particularly like, for instance, the count of Unga, I think it exchanged only 100 shares yesterday. So you cannot really talk much in terms of price movement and in terms of the fundamentals supporting whatnot, but just to mention something about them, both of those two counters, they're actually suffering under selling pressure, because they've been up almost an average of about 30% year to date.
Looking at Access Kenya, we did see it come in positive territory. I think it was on Tuesday or Monday, but falling back in yesterday's trading session. What are you making of the moves in Access Kenya?
Access Kenya, well, the stock has been punched enough. It's trading at around five shillings. Well, these guys have been very aggressive in terms of rolling out the fiber network within the environs of the capital city, Nairobi, and to date they've been able and successful actually to get in at least 5,000 corporate customers, and I think this is what the market is feeding on and really putting on their positions in that particular counter, with a view that this could impact positively on the bottom line.
Looking at expectations for the second half of the year, we know that a number of investors or traders are saying that the results that are due to come through will be quite positive from the different companies. But however, the concern still lies with what's going on in Europe. Your thoughts on what kind of trade we could see coming through in the second half of the year?
Well, personally, I feel, well, okay, let me just say the market has been kind of trading in a range for some time now. Actually, for the last let me say 2 months, between the ranges of 3,700 and 3,800. And I think there's a well-established resistance level at 3,800. Now, I think if the market is able to power through that resistance, well, I can see the market, going all the way to 4,000. Because look, this is a scenario that occurred in 2005, if you remember, around December. And when the market burst through the 3,000 resistance level, it went all the way up to 6,000 by the end of 2006. That's exactly 12 months. So in my view, for the remaining part of the year, if we see the momentum really holding on, and as we have seen the central bank cutting rates and really putting back some of that liquidity back into the market, then why not? I see the market taking off all the way to 6,000.
Market taking off to 6,000. Looking at the shilling, it has been pretty strong over the past while, with the central bank coming in and mopping up that excess liquidity. They were in the market yesterday mopping up about $12.5 million. Your thoughts on the activity that we are seeing from the central bank in the currency market?
Well, the government through the central bank have been busy mopping up liquidity of the market. I guess the main reason has been just to make sure the shilling stabilizes, and we have seen for the last 6 months those kind of efforts have been rewarded, because we've seen the shilling going back to to its long-term average range of about 80-85. And so I guess I see the government really intervening in the market in that form. In that fashion, just to see the shilling maintaining in that level.